As many people can imagine, the rebuilding of one's life post-incarceration has many ups and downs. One thing I'd like to start off this video by saying is that all of the work I'm doing on the marketisnotrandom.com and the books is to help in the recovery of funds to the victims of my crimes. In that respect, all proceeds of the softcover version of The Market Is Not Random will be going to the victims. That being said, I decided to take a few weeks away from the market in anticipation of the volatility we've seen. Since the Bradley cycle high in the beginning of July that I predicted on the website, which led to a nice sell-off, we've seen a re-emergence of volatility. I want to take a look really quick at the primary S&P 500 futures chart, which is the 60-minute chart since the beginning of September. Here you see that we have a very nice double top where the market comes down, fails to take out a new high, and then through my price theory, Clatch's price theory, must take out a new low, which it does. That's the indication that the trend has turned down. From here we see that we then form multiple swings down, including a perfect 61.8% retracement. This here is what started this nice down move through the first half of September. See the 61.8 right there. Then we came down, and right at the 6 p.m. open, we formed a low, and we had a nice explosive rally out. Again, we failed to take out a new low, must take out a new high. Basic theory that leads to massive results. Then the market did what I love to see, a perfect 3 drives to a top. This 3 drives was classic, and as we know by reading my book, the target for a 3 drives pattern is the low between the 3 drives. It is also a change in trend indication. This became objective 1, which was met here, and as you saw, the market did screw around a little bit. Then we came right back down and re-challenged the low. We had a classic indication of a double bottom here, and for honesty purposes, I thought that was it. I thought we were going to go to new all-time highs, because based on Clatch's market tone theory, the market will always have an objective of new all-time highs. However, when that double bottom failed, that was it. Game, set, match. The trend was down. Right here, the trend turned down. From here, the market gave us consistent patterns, another double top, breaking new lows, followed by swings, breaking new lows, and then we saw this massive volatility. Beautiful double bottom, failed to take out or reach the objective, came very close, and one can argue that it did reach the objective based on how close it came. However, really, it failed to take out a new high, so what must it do? Take out a new low. Also, this right here was a classic 3 drives to a top. Perfect. Market continued to break down. We had a expanding triangle formation right there. When the triangle broke, we also had confirmation of the trend. Intra-range double top, breakdown. Had indication of a double bottom here, actually a triple bottom, which we know is extremely rare. And we would only trade the triple bottom if the high between the 3 bottoms is taken out. So we would only believe it if this was here, and then we would have been off to the races. Say we broke down again, and basically had this beautiful double bottom, or more perfect, we failed to take out a new low based on Clatch's price theory, must take out a new high. Then it was nothing but upswings and a perfect touch of the primary retracements. You can see that the primary retracements right here, perfect 38.2, perfect 25, and that was it. The swings were in play. Now we've been in continuous uptrend, and I have no doubt that the market is going to make new all-time highs. However, should the market fall and take out this low right here before taking out new all-time highs, such as let's say we get a 3 drive or some other pattern, then I can unequivocally say that we are entering a new bull or a new bear market. So again, should we not reach new all-time highs right now, and should we take out 1813 on the S&P futures, we will then be in a new bear market. Lastly, I want to go and talk a little bit about time symmetry with respect to these moves. Let's look at the daily chart real quick. If you look at the daily chart, let's take a look at how many highs and lows were found on the 15th or 14th or 16th of the month since of this whole year. Let's look. Starting here, this low, one can argue that this is a double barb, but anyway, we have the 14th, the 15th, the 16th, the 16th, the 15th, the 15th, the 15th, okay? Now, can anybody with a second grade education not believe in time symmetry with this visual proof? Again, here is visual proof of time symmetry with the 14th, 15th, or 16th of the month calling massive market moves, including the recent low that led to this 150 plus point move up that we saw in the last 8 trading days. This is unequivocally the strongest and most profitable way that anybody could ever navigate or trade the markets. I look forward to your feedback on this video, and I encourage you to read my book, and I'm working on the upcoming version of the more palatable, user-friendly, reader-friendly The Art of Revenue book, which I hope to have out before Christmas. I wish you all the best of luck in trading, and look forward to more videos and more posts as we enter the holiday season. Take care.